Here I was pushing the wrong button and almost skipping the intro now. Hello and welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this still autumny Tuesday. I hope you all had a great start into the new week. As always, before we jump into the markets, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using are linked in the video description down below. So the broker, the charting software, the strategy I'm following. And the one thing that I always recommend if you haven't done so is check out the Elliott Wave principle that you can read, or which you can read online for free when you use the link in the description down below. Now with that, we jump here. We see we have another slightly red, but more or less break even starting to the day. And we are going to read Olga. Nice to have you here as always. I hope you're having a great day so far. Before we jump into everything, I have to say, for me recently, I wish I would have more time, or I could dedicate more time to the management of the portfolio, to be honest. And I have to say lately, I've just been spending so much time on different calls, interviews with, I don't know, right now we're looking for a suitable project manager. And after that, there are going to be calls for suitable designer replacements. And it just, I don't know, it feels like I'm constantly lately running behind my to-do list or after my to-do list. And while those calls obviously are important to move forward in the long run, it's a little bit unsatisfying to spend so much time, but then at the end of the day, it feels like not much moved or changed. Yeah. Not that it has anything to do with the trading part, but it would be nice to have a little bit more time for productive stuff again. Yeah. Now, starting today, we can actually take a look quickly at Grab, where we have a Leaps call option for 26, and where we actually finally broke the $4.04 high that we had back in January 2023, which, while no guarantee, points us towards finally being on track for starting our, what I believe is our third wave. I mean, the auto labeling says 0, 1, 2, 3. Personally, it's possible that this is a very, very long corrective pattern. It's possible that this is the correct labeling. I think more likely it might be 1, 2, and now we're in the starting channel or starting phase of wave 3, which should, in our experience, take us up to the $10 mark over the next couple of weeks and months, which would be nice. So it would be 100% increase from, or even a little bit more than 100% from where we are right now. So definitely not a bad thing to see. It took some time and some patience, and as we can see, my call option is still plus minus 0, so minus $3 right now. But yeah, like here we'll have to be patient to see how this plays out in the long run. Now, with that, we're just gonna work our way through. We'll have to wait for the markets to open to see if we already can close our covered calls for GameStop that expire this Friday and write new calls for next Friday. But that we will do in a minute. Until then, we can take a look at Barnes & Noble Education, where we, as said, had, first of all, the predicted turnaround, and second of all, are now on track, what I believe will take us to potentially the $50 to $60 area up here. It could be wrong, and obviously we don't go that high and whatnot. Yeah, but so that's like where I expect us to, based on the current pattern, go in the long run. In the short run, however, it's important we broke the deceleration channel here, which points towards this move here being over and the next 5-wave impulse wave starting. Now, obviously, it's possible that here we already have something like 1, 2, 3, 4, 5, which means we would get a little correction that might touch the channel. I wouldn't like to see it close below this channel / trend line, but even if that's the case, in quotes, the pattern doesn't change yet. For those of you that don't recall, our average is somewhere here, 1046 or 1056. Because we already got in early somewhere. I don't remember when exactly, to be honest. But we increased our position down here at 845 to be precise, and then manually again also here at 880. And since then, we actually saw a decent upside movement, which, if we check it out, our position is plus minus 0 right now. So from here, assuming I'm right, we should go further up. Now let's quickly check the GameStop part here. Our calls right now, we could close them out for maybe $2 per piece. Considering that we have Tuesday, we would take that deal. So if we can close them for the $2 mark, so we buy them back each for $2, but we received $9 per piece, we realize already a huge portion of the maximum profit and are capable of writing new calls that don't pay a fortune. But as we can see, there's actually a huge discrepancy. So we see the medium would be $35 per option. We don't want to make that yet. We first need this one here to close out. Yeah. And obviously that probably, yeah, it already adjusts to $10 per option. So that was the 29 call, sorry. Yep, reset. So we want to sell then 5 of those once that order here, or if that order here triggers. Cancel. We don't want to navigate away. So yeah, so in GameStop so far, since we're already looking at those options, we're still pretty much waiting for confirmation either way. Either that we first will touch the $15 mark, which would be a temporary pending loss on the portfolio. That would suck temporarily, but long term shouldn't change much. Or that on the other hand, we actually get the movement to the top to break the, what was the next mark that we would need to break, 25, 24 to confirm, or at least give us an additional piece of evidence that we finished our correction here. Now, as I said, Barnes & Noble we covered, Grab we covered, Immersion, yeah, we're still waiting, and there's still a chance. So once we break this trend line here, chances are that we might actually finally have seen the end a little bit below of where we thought it would be. Although, as I mentioned yesterday, I've been partially wrong here before because I assumed that this might be the corrective pattern, considering that we're at the base channel, that we were hugging it tightly, and that we had this spike here, but looks like we didn't. And then I got it partially wrong again because I assumed that the 61.8 retracement and the 100% expansion will mark the final downside. Now it looks like we are going a little bit below that. Yeah, so we're waiting for either being proven completely wrong by getting a bigger movement down, or by being proven, in quotes, right enough by getting the upwards movement from here. Intel, now I'm curious, still moving sideways. So, and we got a little bit of a new high here. So still, while my put options play last week unfortunately didn't pan out because of this, we actually caught the turnaround point really nice, but I covered that also yesterday, so I'm not gonna go over it again. No is again at the 20-cent mark, interesting, but again I expect it to go further down, but I still haven't had time to look into the charting issue, why we're not getting a chart for that. Costs correcting a little bit. We would hope to see a break of 879 to have more confirmation that indeed the correction finished here. Right now we are still in a kind of like not equilibrium, but we're still kind of like in the unknown, and have the possibility that the correction itself isn't finished and that we will still get to see the 61.8 retracement as well. Sorry. NEO, yeah, like still dumping down here. So I still think we're far away from the correction being over. Olga says Friday sub 20 or slightly above it. Well, I mean, right now we are at slightly above it, or at 20.55 cents. Yeah. Yeah. I'll have to, it's not a huge priority for me, but considering that I think from what I recall, at around somewhere below 20, from what I recall, it was 5 cents, but it could be a completely different number. It's without a chart, hard to double check. Yeah. But there it would mark, I think, a good entry, and for 5 cents per share, so assuming that's the right number and so on, even at 10 cents per share or so, it would be something that throwing even 10, 20, $50 at might long-term pay off phenomenally. Yeah? And so the risk is limited if it goes south and I'm wrong, but the upside would be quite huge in the long run. Yeah. But yeah, so someday I'll find the time to make, or I'm capable of priority, or someday this charting issue will be a big enough priority to actually make it relevant. Yeah. So special shareholder meeting on Friday. Okay, I did not know that. Yeah, maybe again. I mean, yeah, like yeah. don't want to waste the streaming time with trying to figure out why the chart is not working. But yeah, so Friday then apparently, or depending on when the meeting is, maybe on Friday after market or Monday, we should then see some strong movement, either the break further below 20, which is what I would personally expect from what I recall, or maybe further up. Yeah. So, but I think from what I recall, there should be further downward movement first before there is upwards movement. Yeah. Yeah. Cost. So I said we covered that. NEO we covered. So I think there's still maybe there's 1, 2, 3, 4, 5. Maybe it's 3 not even finished. Maybe we can roughly check if this would be wave 1, 2. Our profit target for wave 3 would be down here. Yeah. And if this here is wave 1, 2 for this, then yeah, we don't bounce too nicely. 1, 2, 3 is too short. 1, 2, 3 doesn't hit the level. 1, 2, 3, 4, 5. So actually, I think we might go further down here. Yeah. So, but I definitely wouldn't throw a lot of money at it before we reach the 61.8 retracement. At some point, even if we're in a downwards movement now, we should get a corrective upwards movement, so ABC or so, before we then get the next push down. Theoretically possible that this is somehow A, B, and C, but if that were the case, so for that, we would have to zoom in, label subwaves and whatnot, but yeah, like I'm not looking for the entry right now, yeah, but we can see, so theoretically, if this would be wave A complete, wave B, and this here is wave C, we would actually expect to reach the 61.8 retracement. Yeah, and that would kind of be the best case scenario, in my opinion. I think from the looks of it, that it actually will go further down before it starts to go up. So yeah, it's one of the patterns that we actually caught nicely and got out here. I like to mention that every time we look at it because obviously we want to celebrate the wins. Yeah. Novavax, yeah, one of the things we don't like to celebrate, but we're still waiting, daily chart. So eventually either for a push further down to prove me wronger, yeah, not even wrong, but wronger in quotes. But I think long term, even if we were to get a push further down, so 61.8, maybe a little below that or whatever, after that we should get a fifth wave further up. Question is, will it happen before my options expire? Worthless, and those are $20 call options, so there's quite some, yeah, like, I mean, there's some time left, but we will see how it plays out. Yeah. Nvidia, now, where do you come from? You come from here, 1, 2. Here it looks like 1, 2, 3, 4, 5. So we have a 5-wave move potentially finished. There might be another push, so because we also need to have 5 waves in here, and on the 8-hour chart, that's not the case. Although if we zoom in, it might already be the case. So possible that either this is one, so from here 1, 2, 3, 4, and 5. 5 finished, or fifth wave not finished, because fifth wave might be 1, 2, 3, 4, and then 5. So there might be a little bit push up. Either way, there would then also after that be another corrective pattern before we then consider to go further up. And I think there should be still more upside to come, considering the overall patterns. Even if the worst case labeling would be A, B, C, and followed by a huge crash, since we broke the all-time high 141.60, very, very unlikely. But even if that were the case, then we would expect to, let's see, where would we be then? Yeah, no, actually, then we would be in the area where the whole thing would start. So yeah, so. But I think for the little bit of upside that should be left in this move, maybe not worth entering. But overall, if one were to enter, a stop loss would ideally need to be here, which is quite some risk. So at 100.95, because it's possible that 1, 2, 3, 4, 5, 1, 2, 1, 2, 3, 4, fifth wave not finished, or fifth wave finished here. Then we get another correction, and then we should get another 5 waves. Now stop loss could theoretically actually be here at the 114.70 mark. Yeah. So, but personally, I'm going to stay out of this. Gonna skip SMCI. It's actually not too much to cover right now. Yeah? SPY. There, our last week's options play also didn't pay out. Now I'm a little bit surprised. I actually thought this might be a finished ABC correction. And but it looks like we're not done here. So that's not like this, but that's then more like that. And there we already also went through the 100% mark, so that's going to be a little tricky. We have here potentially wave 1, 2, three bounces at 238.2, and then we have wave 4 and wave 5 not finished yet. I thought we have 1, 2, 3, 4 and still wave 5 to get, but it might be possible that we already finished 5 waves here, so that we're currently correcting this. So this would actually be, I mean, as option play, a little bit tricky because the time factor is the hard part, but this would actually be a decent entry in my opinion. Stop loss could be at 578.54, because either we have 1, 2, 3, 4 and are about to get wave 5, which then would be wave 1, wave 2, and then we get wave 3, where we couldn't go lower than here, because if we go lower than here, then it needs to be, is it possible that we already have 1, 2, 3? Oh, it's actually possible, yeah. So because like then we have wave 1 and wave 5 relatively identical, so it's also possible. Oh, it's actually, how did I not see that before? So there is the option that we are right now actually are correcting this, so that we have 5 waves finished up here. Then my assumption with this being wave 3, however, has to, no, that still would be fine. Just wave 5 fell short, or not fell, didn't fall short. Let's check. So wave 5 then is probably short, way short of the target area. Yeah, of course. Yeah, so would have been here, and we'd only went till here. If that's the case, so it doesn't have to be, but on the other side there we could have 1, 2, 3, 4, 5, or 1, 2, 3, 4, 5, since we're also, yeah, like, we could zoom in further, but I don't think it will give us much clearance or a clearer picture. If that were the case, we would expect to go down here, so 578. So entering right now, well, if we consider that it might be that we are only correcting this move, entering would make sense. If we look here, we have 1, 2, 3, 4, and potentially 5 finished, really, yeah. So then we would be right now in a correction of this entire pattern. And if we're in a correction, but did we, if we use Kennedy channeling technique, so up, and that would be a wave 1. We didn't get a breakout to the bottom here to confirm that we're in the 4th wave, but we're getting a breakout to the bottom now, which then would still mean that we're right now, so even if that's the case, we would correct this right now, so we would still expect more room for a correction, and that could then be either A, B, C, or it could be 1, 2, and so it could be, yeah, so some downside here to consider. Not how I expected this to develop, yeah, I don't know how I missed that, but yeah, oh, sorry. Some of it developed yesterday, so the assumption was probably that we're done here with A, B, C, and now today we gap lower. Where would the base channel be if we use Kennedy channeling technique on this? It's probably very flat considering this low point here, so, but it pretty much would justify already, yeah, it would justify the 61.8 retracement. Now that's a bigger base channel that we have there on another pattern or so, from what I recall. That would be our base channel. We have our breakout, which gives us our 3rd wave confirmation in quotes. We have the breakout to the bottom only now, which gives us our 4th wave confirmation, and we would actually then still be waiting for wave 5. So yeah, while there are multiple variants that, unless we label subwaves, are going to be hard, super hard, or not super hard, but like hard to fully confirm. Using Kennedy channeling technique, we actually are right now in the 4th wave. That 4th wave very often, but not always, touches the top of the base channel, which would be fitting for 50% or maybe even 61.8 retracement, which means this here could only be the beginning of the correction, which however then would need to be, so there would be a wave B at some point, of course, but then there would need to be another push down. So yeah, I'd stay out of it. for now, but if I were to enter here, I would need to have my stop loss here down at 560, 565.49, so that whatever correction happens here can play out sufficiently before the next push up or impulsive wave up comes. Obviously, there's the risk that this pattern is wrong. We just finished a bigger impulse and the correction will be even from a bigger pattern, but that would be the move that I would, or the play that I would do in that case. And for the NASDAQ, there it's unchanged from like I shared yesterday. So you can check out yesterday's episode that basically, well, there might be the option that we get a wave C down here. I think from the looks of it that we are going to get our fifth wave up here. So the overlap here, 20,700, 20,850, that would be the area that you would expect. And then we're going to get the next correction. So yeah, and that pretty much, ladies and gentlemen, sums it up again for today. Would be nice to analyze some new stocks, but then again, for that I also would need to then dedicate the time, pick something suitable and so on, and work my way from top to, or not top to bottom, but from front to back. Yeah, our GameStop calls so far, unfortunately, did not trigger, so we didn't buy them back yet. I don't want to overpay, so I don't necessarily want to pay $3 per piece when we only got $9. So that's kind of like, I mean, it's still basically realizing 2/3 of the profit. It's kind of, yeah, it's like tricky. Obviously, if the price goes down slightly, and especially if the implied volatility also goes down, we get less per week for our call options. So if we circle back here, sorry, if we can see. So for next week, the premium would be right now like $8.50, $9 for the $30 calls. Yeah, I mean, we could obviously settle on lower strike prices, but that then brings the risk that if we get the upwards push, that obviously shares get called away for less than what we got them assigned for. Technically, if we consider the premium we got for our puts, we could write options at the $24 strike price. Yeah? But that means being willing to give back $600 in premium that we got paid before, which, yeah, like, of course it would make a difference because we can see we get at least, or we get roughly double the premium. And obviously over the last couple of weeks where we have been writing those $30 calls, we would have earned more in premium. But then on the other hand, once they get called away, we actually would, in quotes, give back premium that we earned earlier, and I just don't see a reason to do that. Yeah? If we would have a clearer pattern, then it would also be easier to say, okay, we can write smaller or lower strike price calls. But because the pattern right now supports either the push first down to $15 or we're done with the correction here and are in the upwards momentum, it's kind of like a tough choice. And on the other hand, if or when we already fall below that, yeah, so maybe we can, but for now we won't. So as a pattern, it's tricky because with the naked eye, this here would also be 1, 2, 3, 4, 5, or 3, 4, 5, A, B, C. So, but then on the other hand, I believe 70 or so is the $10 low after dilution. Yeah, but that's still you mean the 70.56 that we had? I'm eyeing the 70, but my exposure is already high as hell. Yeah. Yeah. So, but I still think so that if we are going down, then we could easily have a spike that goes lower. You know, even if just briefly. I don't know, you know, visually this here is 1, 2, 3, 4, 5, or maybe 1, 2, 3, 4 and truncated fifth wave. Yeah. And either way, then it should be followed by a corrective pattern. If that is A, B, C here, then we would now see the next 1, 2, 3, 4, 5. Yeah. So that would be one way how it could turn, go, or whatever. On the other hand, it could be wave 5 finishes here, and this would be ABC, and we would be 1, 2, 3, 4, 5. It could be that this is then A, B, C, so we still go a little down, but if we go lower than this, then that cannot be a 5-wave impulse, yeah. That part here is tricky to label, whereas this here is also very nicely, again, 1, 2, 3, 4, either 5, A, B, C, 1, 2, 3, 4, 5, but then we go lower here, which makes this a weird pattern unless it's some double zigzag or so, with basically here an A, B, C, and here, I don't know, A, yeah, like maybe a big one, A, B, C, but then it would point towards going further down, which would mean we would need 1, 2, 3, 4, 5, A, B, C, 1, 2, 3, 4, 5. So it's like here the pattern is just, corrections are really tight or hard to label or confusing sometimes, yeah. And yeah, it's tricky. It would be tempting, obviously, to say, okay, screw it, I'm going to sell the $24 calls, because again, it's double the premium, even if it's not a fortune, but it's still right now would be $16, so $80 in a week in premium, which is not much, but it means, okay, I could use those $80 to buy 4 more shares, for example, or make some other trade, yeah. But then on the other side, the risk is if it then goes up, then I get the shares called away, or I take a loss by rolling the options, so closing the ones that I wrote at a loss and selling new ones, yeah, with a higher strike price. But yeah, I think, considering that I cannot dedicate more time and that I cannot mark the market or watch the markets at all time right now, probably better to play it safe, in quotes, with the $30 strike price calls, so that I don't risk suddenly getting surprised and having my shares called away at a lower strike. And yeah, just wait it out. And it's also, it doesn't help much that the, yeah, like, so this part is actually the confusing part. It would have, overall, it would be fitting to say we might have finished here with the correction, but as for the low point, I think, yeah, like the 78.6 retracement, I can imagine 78.6 retracement, I can imagine that we reach that, yeah. Yeah, when you make money elsewhere, no point spending more time. Yeah, I enjoy it. That's the point. And obviously, it's you know, there's like the difference. So I mean, we have our YouTube channels, although unfortunately I'm lacking, or I'm not making enough time to publish regularly, or as regularly as it should, but they still generate a little bit of revenue. So it's kind of like almost semi-passive income, which is nice. And we have our software business, which generates revenue, but we are already for so long working on launching a new software product and relaunching the existing one. And there's a lot of time that goes into that, and a lot of money paying freelancers and so on, that very, very often, unfortunately, that do not deliver what was agreed upon, where then, depending on contract and so on, the best you can do might be argue to get a part of your money back, but at least some of the money is usually still gone, and your time is still gone, and so on. So yeah, well, we're making money on the other side or so. Trading profits are obviously, in quotes, immediate, yeah, unless you are in a position that you have to hold for a long time, yeah, which right now we are. And the other core difference is that, obviously, since we are not trading in our legal entity, but I'm trading personally, it's also immediate in terms of, if I would make a good trade, so if one of our option plays the last couple of weeks would have worked out, or I would have taken profit, although the taking profit was obviously in the $60 and $100 area. But let's assume one of those trades actually works out, then whatever profit there is, after consideration how much tax there will be or so, I could instantly withdraw and use for whatever, like, I don't know, a new computer, better equipment for, I mean, okay, those are often anyway business expenses, but I don't know, maybe a vacation, maybe something else, you know, maybe to pay the income tax statement or the income tax bill, or I don't know, yeah. So you're obviously 100% right. If you're making money with something else, then why bother spending more time? And then there's also the long-term potential, because the more time I can dedicate, if I, for example, would be able to dedicate my entire day, in quotes, or from when the market opens, or maybe an hour before that, to watch the NASDAQ or to watch SPY, instead of just jumping in it for 10 minutes, even if I would be maybe not 100% sure about this right now, for example, I could actually almost, maybe not day trade it or so, but doesn't even have to be SPY, but could be anything else. So there we're gonna zoom out. So it could be any other stock, and even in GameStop, I could look at a 15-minute chart and just check, is there something like an obvious pattern? Like, so selling puts is the best option to generate safe money. If you're anyway willing to also enter the stock if it goes below, or you're willing to roll the options for a loss. I really don't mind getting the GameStop shares assigned, but it obviously was nicer selling the puts every week and pocketing partially $2,000 in a week in premium than it is to writing the calls and making $50. So if I would dedicate more time, and we have then situations like in NEO where the pattern played out super nicely, like really to the letter, then it obviously would also pay off. So if I see this pattern like I did, then I just buy a handful of shares and then I get out here. That's great. And we made a handful of dollars. But on the other hand, if I were able to dedicate more time to it and I see this pattern, then I could also, in quotes, day trade that. And even if it's just with $1,000 or so, but then I could sub-label this here and would for maybe, I obviously would get it wrong from time to time as well, but the more time I can dedicate, I wouldn't have to focus on a stock where the corrective pattern right now is super annoying. So where it's like, we're still waiting, and let's switch here to daily actually to get a little fewer candles. So, but I could literally go through stocks. So that could be biggest movers of the day to look for third waves, because they're usually the strongest one, and to then at the usual levels make a small gamble. So if the overall pattern is, for example, up, then either with put options, so that there is a limited risk to just the premium, make a small gamble that, okay, wave 3 will finish at the 2618 extension. So if I look at biggest movement or so, which might usually indicate a third wave, and I would then get the target areas where the third wave might finish to then buy a put option. And if I'm right and it turns around where it usually does, then the put option prints. But so that would require more time to do research, because it requires then pick or stock picking basically. So setting up filters to find stocks with strong movement, but that also have daily options available, not just weekly ones. And I don't know. So like long term, however, I'm aware that the core difference is not so much. The core difference is not so much that making money with something else, but the core difference, in my opinion, is that no matter how good I trade, so even if every day I would find a trade that has on the day a 50% return, I obviously couldn't risk the entire portfolio on every trade. So even if I say I risk 20% of the portfolio, the net result would be a 10% return, which would still be good. And even with like 10 to 30,000, like you say, still would be a decent amount of money for a day. But the point is, it's not passive, not in any way, because if I'm sick, if I don't find a trade, and then we have to consider losing days in between and whatnot, and it changes the whole equation. Whereas obviously everything else I'm doing, even if I'm spending, like yesterday we had 3 interviews with project managers, today 1 interview with a project manager. So even if I spend, 2 hours, 4 hours, whatever amount of hours just with interviews or so, which just costs me time and thankfully not money, but time, I'm doing it for something that once we find the right person and then move forward with the project, that actually creates something that generates maybe not 100% passive income, but semi-passive, where you just have to cover some customer service for whatever project you launched and maybe some future development, but then it generates revenue, and you have, even if you're a week sick, you still have users that pay their subscriptions. So, But But it's obviously always tempting, especially, I mean, when you on Reddit see, I don't know, somebody makes 2,000% with an insane options play, yeah, which obviously nobody should do, yeah. And of course, if you have more money, it's easier, because if you would have, so like you say, you can either wait for the perfect pattern, perfect entry, or you can even make smaller trades if you want to, because on a 300,000 portfolio, if you have one trade per month that makes 1%, yeah, so like, or I don't know, maybe you have a handful of trades, but the net result every month is 1%, which would anyway be an insane yearly return, yeah. But then you would make one trade per week only, and you lose one, you win one, whatever, but net result 1%. Then even after 25% taxes, if you don't have it in your legal entity, you're still looking at, maybe let's say 400,000 portfolio and 1% return, then you still would look at 3,000 after paying 25% taxes on the 4,000 profit, which is enough for an average citizen to pay rent, food, and everything else, yeah. But you still have to spend a lot of time to analyze the charts and find those entries, yeah. I noticed, like, when I look back on the trades that went south for me, some of them I really misanalyzed completely, yeah, so I just got it wrong. But what I also noticed is some of the losing trades, actually, I would not have made if I would have spent more time on double checking them. So because I lacked time, I did not bother to, for example, say, okay, I'm going to zoom out on the weekly chart to also verify that the pattern there matches. But I was only focused on a very small time frame, and then with that very small time frame, suddenly it looks like it is this or this pattern, when in fact it's a completely different pattern, yeah. But yeah. Anyway, I gotta go. So Olga, thanks for stopping by. Anyone who lurked, also thanks for stopping by. Don't forget, be so kind, hit that thumbs up button, really makes a difference. And if you wanna see me again, like, subscribe, enable notifications, so you get notified for the next live stream, usually Monday to Friday. So when the American markets are open, around 5 minutes before market open. And yeah, so see you all then tomorrow, and have a great day. Till then, bye.